Some newer investors are sometimes surprised to learn that even with our current much higher mortgage rates, Toronto investment properties can cash flow. It's true that many don't. Condos, towns, and single-family homes definitely don't cash flow these days. But there are some 2-unit houses and most 3-unit homes in Toronto still do. We're also in a buyer's market, and if you choose the right type of property where there are fewer buyers than the average market, you might be able to get an even sweeter deal. So in this video, let's walk through the general trends in today's market, and then I'll go through a couple of submarkets where you can get really good deals these days. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. Before I dive into the submarkets with the best deals these days, I really want you to understand more about what's going on lately in the Toronto freehold market. Yes, buyers have stepped to the sidelines ever since interest rates started hiking, and so monthly sales have halved compared to the same point last year. And even though new listings are very low because sellers are holding back when they can, properties that end up selling are sitting on the market for a longer period of time. Take a look at this chart where you can see that the active listings are around 50% higher these days compared to the average in 2021. But what's been happening is that after the big shift in sales and listings, when interest rates started rising, both sales and active listings have stabilized for 4 months straight now. And because of this, prices have held steady since July. Now, if you look carefully, you can actually see that buyers are slowly coming back and the sales to active listings ratios are improving. Now, if this happens in a normal market, prices would be coming back up, but this rebound in prices is probably going to be capped in our current market today because interest rates are so high and they're probably going to go even higher. And this is going to create a hard cap on prices because of financing. Here's the thing, back in February, a couple making $200,000 a year might have been able to afford a $1.6 million home. But now that stress test rates are at 7.5%, the same couple's budget is now capped at closer to $1.2 million. And this is exactly what's been happening if you look at recent sales data. In February of 2022, 50% of sales transactions were priced above $1.6 million because banks could lend people enough money to buy them. Now, as of October of 2022, that 50% mark is now at $1.2 million, completely in line with lower mortgage affordability. As a reference, only 25% of buyers are now buying above $1.5 million, whereas it was at $2 million before. So with a dwindling buyer pool at higher price points on the investment side, you end up seeing bigger multiplexes sit on the market for a longer period of time, and eventually they often get bought by an investor who is buying with a lower amount of leverage and more cash. So if you can't afford it, investing in bigger properties makes some of the best deals on the market these days. Now, if you are tapped out like most of the population, then the other alternative that is seeing a lot less action these days are properties that need major renovations. Just think about those who won't take on these projects. You have those who don't have time to deal with renovations. You have those who won't want to take on renovation adventures because of the higher risk. And then even if someone has the time and risk appetite, they might still not have enough money to do so. Here's a simple example. You can buy a $1.1 million turnkey house these days, and if you put a 20% down payment, you would need $260,000 in capital, including closing costs. Now, instead of that, you can also choose another house that needs $100,000 in renovations. From a numbers standpoint, you might end up making more money, but the downside is that you actually need $60,000 more of capital, which not a lot of people have these days. But these are also some of the best deals out there. If a property has been sitting on the market for quite a while, you might end up getting great discounts, which is the obvious upside. But you are also lowering your financial risk if you're paying for renovations out of pocket. So instead of having a higher loan-to-value ratio of 80%, you might lower it closer to 70%, and so you end up getting better cash flows and better holding power. This also means that mortgage ratios will also improve, which will be important in the future if you're looking to grow your real estate portfolio. And finally, some people might also argue that since you're doing the work yourself, you know what's exactly behind those walls and what work has actually been done, and so you might end up seeing fewer repair and maintenance issues down the road too. And so if you put two and two together, the opportunities that end up seeing the best bargain power in the investment property market today are multiplexes that need big renovations. And a final thing, list prices didn't mean much in a hot market because everything ends up selling for much more than the list price. But these days, it still might not mean much either because selling prices might end up going the other way, lower below the list price when there's not much action on the property. This isn't the case for all properties, so this might be the confusing part for you. If you're buying an end-user house in a trendy neighborhood that checks all of the boxes for most people, then you might be disappointed to hear that we're seeing multiple offers still. And so it's not actually that easy to tell what's really going on unless you're very familiar with that property and really poke around with the property and seller specifics. And that's really where our sales team comes in. We're a real estate sales brokerage that focuses on investing in houses in multifamily homes in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you the deals, crunch all the numbers, and eventually get you the best opportunity for you. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.